Welcome to the information age. The good news is that you have access to more information than ever before. The bad news is that you have access to more information than ever before. Excess information causes a modern disease we call information-itis. Today we're going to talk a little bit about how you can tell whether in fact you have information-itis and what you can do about it. First question to ask yourself is, how often do you check your stock returns? Do you check them hourly, daily, weekly, monthly, yearly? If you check them hourly or daily or even weekly, our advice is to just walk away. Turn off financeyahoo.com, put down the financial papers, tune out Jim Cramer. Definitely tune out Jim Cramer. Tune out all the financial stuff after you watch this video. To paraphrase Oscar Wilde, you could say that an individual investor knows the price of everything and the value of nothing. The hourly and daily and weekly price fluctuations typically don't matter for the individual investor. The only thing that matters about price is the price you pay for the thing and the price you sell the thing for, determining an entry point into a stock and an exit point. Everything else is just noise. The signal to noise is a term that comes out of electrical engineering, and it generally refers to the ratio of noise, garbage, to actual useful information. So think of the following idea. You're in an emergency and you're on the phone to a 911 operator, and the conversation every once in a while cuts out or is staticky and you can barely understand what they're saying. Signal in that case is their voice, what they're communicating to you and what you're communicating to them, and the noise is all the clicks and staticky sounds on the line. What happens when you have information-itis is you get overwhelmed by the noise, and paying too much attention to the noise causes us to make mistakes like buying high and then selling low. Another problem with information-itis is it overwhelms our limited ability to process information. When we're exposed to too many choices and we have thousands of choices in the stock market, we find it very, very difficult to make a sound decision. We focus on attention-grabbing stocks, stocks that are in the media, and those typically do very, very badly over time. All the research says that they actually are terrible things to invest in. An alternative to that approach is to do what institutions do, which is to limit the amount of choice that they have available to them, to cut out all the noise by screening for very specific criteria in a stock. So in our case, we like to look at high return on asset companies that make a very, very decent rate of profit and have very, very little debt. So if you can screen the thousands of stocks and only look for the companies that meet that criteria using a computer screen, for example, you're in a much, much better position than most individual investors who focus way too much on the noise because of information-itis. A third problem with information-itis is that it leads to confirmation bias and increases our illusion of knowledge and overconfidence. Oftentimes, the more information that someone has available to them, the less real knowledge or insight they have. Selective perception and confirmation bias allow us to overweight that information that confirms our prior belief and discount information that disconfirms our prior belief. So if you look at the case of basketball fans or baseball fans who, if they're more familiar with a name, they think they can predict the outcome of a game better than they actually can. Investors who think they know more about a name or a company just because it's familiar to them. That's a real problem for investors. The world is a very dynamic place, and we want to be on the lookout for things that change our thesis about how it works. We actually don't do that as much as we should, and that gets us into a lot of trouble. So how do you overcome information-itis? I think the first step is to actually gain a little bit of humility and understand that the world is a complex place, and an individual company, a publicly traded stock, is so complicated a beast that to try to understand what it's doing on an hour-to-hour or week-to-week basis doesn't make any sense and is just a waste of time, because we just aren't good at predicting how the world's going to change. Better approach than trying to figure out whether a market is going to zig or zag, or an individual stock is going to do better than another one, or all that. Focus on an investment process where you say, in our case, I'm looking for companies that have a high return on assets. In our case, that's greater than 15%. No debt, cheaply priced. That's all we're looking for, and that allows us to cut out all the noise. If we focus on a decent portfolio of those companies and those companies only, sometimes we're going to be wrong, but it's a process that has been proven over time to build wealth. One of the things that scientists do to overcome this confirmation bias is to engage in falsificationism. When you do a hypothesis test, what you're trying to do is actively disprove your hypothesis about the way the world works. What's called a null hypothesis and an alternate hypothesis. And it's the null hypothesis that you're trying to test. Those sort of statistical tests are the kind of rigor that's necessary for every individual investor if you choose to go it alone. So what you want to do is seriously attack your intellectual framework of how the world works. Another piece of advice about how to overcome informationitis: ignore the tidal wave of information or noise that's coming at you. Understand that it doesn't offer you any deeper or greater insight in terms of how to improve your returns, so just turn that stuff off. Another piece of advice for the individual investor is to pick up and read Joel Greenblatt's excellent book, The Little Book That Still Beats the Market. In that, he talks about a very disciplined investment policy or an approach to investing. Personally, I don't think most individuals should be invested in the stock market. It takes a kind of emotional fortitude to do it, and I don't know if that's a quality that exists in most people, frankly. But if you are one of those people who insists on buying stocks, then the approach that's laid out by Greenblatt in that book would be helpful to you. That does it for this video. Thank you very much for watching. As usual, if this is stuff that someone you know might find interesting, feel free to pass along the wealth to them. If you could subscribe, that would be fantastic as well. Next week, we're going to put up the second half of our investment horror stories, The Zombie Investment Advisor. And after that, we've gotten a lot of requests for new types of information from people, and we're going to start working on those. So stay tuned.